Good day, my name's Ed McFerran. Welcome. This is a video that's intended to help and assist you in understanding what we call exchange value. Exchange value in a tax-deferred exchange is not the gross sale price or the gross purchase price. In essence, it is a factor associated with the gross purchase and sale price, but it's adjusted for the actual costs of closing. In order to complete a full 100% tax-deferred exchange, we need to acquire a replacement property or properties equal to or greater than the exchange value of our relinquished property. So let's go through that one more time. The relinquished property is the property that we're selling. It has a gross sale price, which is the price that's typically included on the purchase and sale agreement right towards the top. Let's assume that we have a gross sale price of $200,000 for our relinquished property. That $200,000 is not the exchange value. That $200,000 is the gross sale price. What we need to do is we need to adjust that sale price by what we refer to in the tax law as attributable closing costs, or in other words, what we call allowable closing costs. What are the allowable closing costs that we're going to adjust that $200,000 sale price in order to achieve the exchange value? Well, one of the allowable closing costs would be commissions. So if you're paying a real estate professional to help and assist in the sale of your property, you can adjust the gross sale price of that property by whatever commissions that you pay at the time of the closing and escrow. What's another cost? Well, escrow fees. Whatever state that you may be closing your transaction in will typically have escrow fees or attorney fees or title fees or whatever. Those fees that are attributable to the closing will be adjusted from that gross sale price, as will escrow fees, title examination fees. If you're in the state of Washington, there's an excise tax. If you're in the state of California, there's a transfer fee, or what we call a transfer tax in California. If you have recording charges, if you have prorations of real property taxes, all those types of things are what we call attributable closing costs. Commissions, title, escrow fees, recording charges, excise tax, transfer fees, seller concessions to buyer closing costs. Well, I guess I should tell you there's one other attributable closing cost, and that's the qualified intermediary fees. Our fees in completing your overall tax-deferred exchange transaction are an allowable closing costs, and you're not required to pay our fees yourself out of your account. Our fees, like other closing fees, are paid and are attributable to that gross sale price adjustment. So our staff will help and assist you at the time of the closing of your relinquished property and go over and determine an exact dollar amount of what we call exchange value. Hopefully they have done that by now if you've already closed on your transaction. If not, you need to know how that is calculated. We're going to take that $200,000 figure and we're going to go line item by line item by line item and adjust that. And we're going to result in a figure, let's assume that the figure is $220,000. That is then the value of the property that we need to replace in order to do a 100% tax-deferred exchange. If we complete a 100% tax-deferred exchange, we will be acquiring a replacement property, again the property that replaces the relinquished property, and it will have at least a value of $220,000. Now keep in mind, that could be two properties or three properties that aggregated together could have that value, or it could have a value much higher than $220,000. In the case of it being higher than $220,000, we're not concerned one bit about meeting that requirement. What we're mainly looking for is trying to make sure that we have a beginning point for purposes of determining what dollar amount is necessary in order to complete a 100% tax-deferred exchange. Then we need to take a look at the replacement property, because the replacement property has also a gross purchase price. But the gross purchase price isn't necessarily the overall exchange value, because it's going to be adjusted by attributable closing costs, or what we call, again, allowable closing costs. In most states around the country, the seller pays significantly more allowable closing costs than purchasers pay. In the state of Washington, for instance, the purchaser in a transaction can anticipate paying merely half of escrow and possibly some prorations of real estate taxes. Other than that, a purchaser will have very, very little in what we call attributable closing costs, and as a result, the exchange value will be adjusted by very few dollars. We compare the exchange value of the relinquished property with the exchange value of the replacement property, and to the degree that those values are equal, we have 100% tax-deferred exchange. To the degree that the replacement value is greater, then we have 100% tax-deferred exchange. To the degree that the exchange value is less, we still have a valid tax-deferred exchange, but we may be completing a 95% or a 90% or an 80% or an 85% tax-deferred exchange. And of course, we pay the difference of the capital gains tax on that amount of value to which we don't buy a replacement property. Let's talk about this subject for just a moment. One of the biggest important topics that come up in this area for us is what we refer to as profit exchanges versus value exchanges. Many clients, possibly yourself, will believe that all you need to do is reinvest the profit. Now, that's not really correct. What we need to do is we need to reinvest the overall value. We need to reinvest the overall exchange value. So even though you may have $100,000 of profit, in the case of our example, we're going to have to replace it with $220,000 of value in order to achieve 100% tax-deferred exchange. So don't be confused. These are value tax-deferred exchanges. These are not profit tax-deferred exchanges. We need to talk for just a moment. The last subject that we'll have in this video regarding exchange value is one that we need to make a few comments regarding loan costs and loans. Exchange value we refer to as attributable closing costs. One of the attributable closing costs has nothing to do with loans. I'd like to point out that we have another video on this subject that we'll go over in detail about loans and mortgage loans and the whole thing. You may ask one of our staff members to provide you a copy of that video link as well. That could be helpful for you when we start talking about mortgage loans. But suffice it to say that we're not concerned in exchange value in one iota whatsoever regarding mortgage amounts or mortgage loans. Tax-deferred exchanges, at least for exchange value purposes, are not concerned about the loan that you have on the property. They're concerned about the overall exchange value of the property. Hopefully this gives you a little bit of an inkling regarding exchange value. Again, you will find that none of our videos in this area replace the quality of our help and assistance that's available to you from our staff. Feel free to contact any of our people daily, and they're more than happy to discuss your particular question, and as part of our service provide you some very specific answers for your particular situation. Good day.